Hey guys, it's Will. Hopefully, you're having a good day today. If you want to know the top companies that are driving the growth of AI, then this is the video for you. We're going to go over the data center companies that we're following during this huge AI boom that we're in 2025. And if there's one thing we've noticed from all big tech companies, they're all investing more in AI. So that's what we're going to go into right now. How are you guys doing? How is it? We are live right now, so you should be able to see me and hear me okay. Let's jump into it. So let's get our first analysis here. We're going to pull up APLD stock. It's going to be a full analysis of this data center play. A couple key things we'll want to watch. It's going to be the future chart, what we got going for the projections on the stock and targets. And then we'll want to look at the analysis, what those targets are driven by. And then we'll want to also take a look here at some of the institutional interest in the stocks. And that's what we got set up here. We're going to use, we got Grok selected right now. Grok has been performing really well. It's considering a ton of data over on X, or formerly Twitter. So we're going to use Grok for this analysis today, as it's been my go-to, along with Claude. OpenAI and Gemini are good as well. So first thing we got going here is going to be APLD stock. All right, we're going to take a look here. And I see the chat here before we jump in. You got Killa says, what's good, Will? What's going on? Where are you guys tuning in from? I see all the messages. Elvis, Luca, what's going on? Lunar, APLD, cool. 15-minute lectures says, help me, please. What do you need help with? EC says, Wolf stock. Okay, that's going to be in the data center market. GLXY, I'm not sure about that one, but we'll take a look. Saiku says, looks like the momentum in AI and DC stocks is fading. I don't know. What is momentum? Talking about just in the last day, or are we talking over the year? Let's take a look. So, for example, if we're looking at fading momentum, it's very, very small moves. If we look at APLD, it was literally $1 a share not long ago, $2 a share back here in 2024, and then surged from this $3 a share back in April of 2025 this year and rocketed up to $40 a share. Do we see it start to pull back? Yes, a little bit, but is that far off from, is that losing its momentum? No, I don't think so. I think we're just getting started here in the AI market. How many of you guys feel like we are going to lose momentum in AI? How many of you guys feel like we're just getting started? I think, there is a golden goose here, and it is the AI market. And we're looking to, you want to keep feeding the golden goose. And we're able to identify companies that are actually powering AI. And these are the golden stocks, I think, that we're going to look back on and think it was ridiculous that not everybody was considering some of these companies. Because we're talking about the infrastructure for the future. And it's kind of like imagining if when the iPhone was created, imagine if the iPhone was humongous. What if the iPhone was just as popular, just as big, but it was the size of a small city? All of the economies that would go into making that iPhone would be like the construction, the battery, the camera, the touchscreen. Those things would be huge economies of scale. And so when you're looking at AI, we literally have that in front of us. It's like AI, massive economy of scale, data centers are these huge iPhones, you could say, these huge computers that are being built right in front of us. And it requires the shell, the casing. It requires the racking systems, which would be like, the casing or the camera, you could say, or the GPUs, the chips, the cooling. So the cooling of the data centers. And it's like right in front of us. I see a bunch of comments on rare earth. That's what you're following here. You're way down. on some rare earth stocks. Got it. Okay. Problem with the rare earth stocks was a lot of hype after the bills that were passed. But I think rare earth stocks are great. It's just you got to look out for the ones that have literally negative net income, but were just surging because of news from Trump or something like that. So I would watch out for those. Um, and yeah, Johnny says AI is only getting started. I would say so. I would say so. I think if anybody's saying like, oh, that's it, AI is going to be going down from here. I mean, you're missing something big here. Let's take a look at APLD. So APLD stock is on a very consistent uptrend. Looks like last time we were looking at it here, we do have long-term positions on the stock. You can see a position there we have that's up about 120% on the right there. When we're looking at what we're projecting, it was a 20% increase. We're looking for a 20% increase up into this $40 range on APLD. We have not seen that move play out. In fact, it's kind of consolidated and just gone from left to right here into this level, selling down today. Overall uptrend on APLD has been very bullish. You see them continuing up, but definitely having some trouble continuing the momentum in the last day, as we see them pull back down into that $32 range. They're still 10x from when we started covering them, right? But they're still recently pulled back. They could break pattern here. They still have this overall uptrend. Maybe they break pattern, but I think they're going to do something similar to what we kind of saw over on IREN stock. If we take a look at IREN today, we were anticipating a move on IREN that was very similar to what we see here on APLD. So we were looking for this type of move. So very consistent uptrend is what they had. They recently pulled back and they were kind of consolidating from left to right. Okay, kind of see this level. Let's see how it looks here. Kind of see how this looks. It's saw them starting to trend upward, and they were kind of getting beat down, kind of consolidating out around that $59 range. And then boom, they surged in the last day or so up into $78 a share, 30% before pulling back. Now, IREN ended up signing a really big deal the last week or so. I think it was yesterday that they signed a deal for what was around a couple $billion, $9.7 billion contract with Microsoft. Huge contract with Microsoft. And so IREN just signed that. That put them into this $78 range, and then they corrected back down to $67. We're going to watch them as that's a really big move. We see them sell back down. Previous resistance around 65. I'd like to see them hold that level. But overall, I mean, data center stocks. How many of you guys have seen the data center stocks start to ramp up the last few months? It's been pretty impressive. You got IREN, so Microsoft is betting big on working with that company. To know that information is very important because if Microsoft's willing to invest in them or use them as a data center company, then that means that they're going to have the quality to expand and most likely grow much faster, this IREN company. Similar thing would be like CoreWeave contract with APLD. As soon as CoreWeave got that APLD contract for $7 billion, then they had some other contracts kind of roll in and they started to snowball and really start to surge up into that $40 range, and they basically 5x'd. Very similar in other industries as well. I mean, you could look at AMD stock. As soon as AMD started to jump into data centers, their stock started to go very, not as soon, but very quickly after, they started to rebound big time. And then also like Starlink, you see a partnership with AMD and Starlink. That was a big catalyst. So you kind of look for partnerships like that, and they definitely do impact the companies. Super TA says, hold it tight. What's going on? Who's trying to hold something tight? Oh, Luis says, hey, Rich, I'm a holder of BBAI. I'm down 1,000. Got it. Do you have any actionable steps you're taking right now, or do you got a question about that? Is it like a long-term thing and you're like, oh, I'm just, acquiring shares, or it's like you were in a shorter term thing, you're down 1,000, that's like a lot of money for you, and you're like, oh my God. Or are you more like it's a big position, you're not really worried about it, or what do you mean? What's the mindset right now with that? I ask just because it kind of it matters on how I'd respond. I don't have an answer for you there. I'll tell you. Louis says, yeah. Yeah, okay. What, Luis? Which one was it? Tell me the story. If you want to share, I could go over it. Michael says, Alex said a lot of companies wouldn't make it in the space tech and will fall. AI space will fail. Oh yeah. I mean, of course, but it's super easy to tell which ones are going to make it. Well, not super easy, but like you have to look at the real world usage, and you have to look at the financials. If you don't look at the financials of the company, you're betting on startups, and 95% of them fail. And the dynamic in the stock market nowadays is a lot of companies, it's not like it was in the past where you kind of go through this, you got to earn your stripes and then you become a profitable company, or things start to look really good and then you kind of become a stock. A ton of stocks being launched in the last few years are being launched and don't have even any financials, and they have a lot of really good marketing, and you just have to watch out. I mean, especially with people covering them online like YouTube and stuff. We never cover stocks for short term or long term that we wouldn't want to hold long term, really. You'd be surprised. I mean, we'll go over the ticker symbols for sure. But yeah. So again, I'm going to keep holding APLD. This recent pullback here to $32, I would expect them to continue their overall direction and make this run back up into this $40 range, something like this, about a 25% increase. So I'm going to keep holding them. But even if they sell down, if they were to sell down to that 200-day moving average, another 5-10%, totally fine with that. And they're a long-term play. Acquire shares in them. Data center stocks, robotics stocks, AI and space tech stocks. I feel like I can't talk. That was a mouthful. Quantum stocks, they're going to be companies that are long-term plays. And so I'm just going to keep acquiring APLD. Hopefully that's helpful. You can do whatever you'd like. That's not saying you should buy it or anything like that. It's just me sharing with you guys what I think. If that's what you want to hear, seems like that's what you guys want to hear. Rare earth killing me. I learned to not get ahead of myself. Got it. Okay, what happened there? Was it the news, Trump news, things like that? What happened? And then on IREN stocks, that's the deal with APLD. IREN, we were looking at $67 price point. Very similar. I haven't entered long-term play on IREN, but I'm basically this close. I'm so close. Probably tomorrow at market open, we're gonna be buying some IREN, I think. I need to get some IREN. It's been way too long. In fact, I found this stock, or was introduced to this stock by you guys, which again, I can't take it lightly, some of the stocks you guys drop. I'm gonna look at all the ticker symbols. A lot of them, not anything negative towards you guys, but I'd say like 90% of the stocks are definitely like, well, they don't have favorable financials. But there's a lot of stocks, especially from our stock mates, because we go through, they learn how to do like financials, and you guys watch the channel a lot, but primarily stock mates. But you guys that see the channel a lot, and you see us go through the financials, and then you drop stocks. There's some really great picks. There was a really good pick from somebody. Johnny, are you tuned in right now? Johnny, what was that stock that you brought up like last week in StockMate in our daily live trading session? And you said something, I hope Johnny's tuned in. You said like a ticker symbol, and I did analysis of it. I said, Johnny, this is such a good play. I have this added to my watch list, and I got to watch this one. And I don't remember which stock it was, but I don't know if you can remember it. I think it was like last week. If you can remember what stock it was that you've been telling me, Johnny. I don't know if Johnny's still tuned in, guys, but we'll see. We'll see. All right, so the ticker symbols here. Okay, so Luis said on that Big Bear AI trade, he got in at $7.40. Okay, so you got up there pretty high. Got it. Okay. And you're worried. Got it. Let me ask you though, what's the plan? $7.40 entry. Is it something that you want to hold a long time, or were you trying to make money quickly? I would assume you were trying to make money fairly quickly in like a week or something. A swing trade or a day trade or something. Because otherwise you probably wouldn't be worried. Maybe help me out with that. Oh, Johnny says it was CPSH. Okay, let's go. Thank you, Johnny. Let's go. Shout out to Johnny. CPSH. All right, this company, what's going on with this company? All right. So I think when we covered it, Johnny, we were looking at this recovery and we were looking at a 35% recovery. And it made that recovery and it's been kind of consolidating from left to right and continuing this overall uptrend. Now, this is an interesting stock, and I might be getting off track here after we covered APLD. I showed you guys, and we can jump back into IREN, but really IREN, and like I mentioned, I'm bullish. It pulled back. It looks very similar to the stock we're looking at right now. But anyway, CPSH. Here's what we liked about it. Johnny, one of our stock mates, which I mentioned, we have really good analysis from a lot of the members that are in StockMate, because we got about 28 millionaires in there. And I don't say this to like promote StockMate, although if you haven't joined StockMate already, you should. Live trading's happening in 12 hours from now. And we got 28 millionaires in StockMate. So if you want to surround yourself with other individuals that are in the 7-figure and above club, and send me messages if you got questions, things like that, you can jump in, join us tomorrow morning. But the reality is some of the analysis is so good for some of these members, really, really good. And here's what we got going with CPSH. I want to actually jump in here. CPSH, Johnny brought it to our attention. Now, Johnny, don't worry about this. Everybody that's tuned in right now knows we're not bringing up any stocks to hype stocks for any agenda or any recommendations whatsoever. It's basically just the value to the marketplace that we identify and relaying that to you. And that's what we're here for. So Johnny, don't worry about it. Like, everybody appreciates your contribution. If you see thousands of people seeing this and it were to not go up or not go down, I would start it by urging caution. It's a $62 million market cap. That's pretty small market cap that can move very quickly. It moved 12% today, which actually has my attention now, because that's usually when I get excited, when things go down. Take a look at this income statement. So first of all, what do? They specialize in technologies pioneering next generation of high performance materials, solving the world's toughest challenges, aviation, defense, oil and gas industries. A little bit boring, pretty lucrative, obviously. Revenues are up to $4 million a quarter in 2024, but then you see them grow and grow and grow, and they're actually growing up to 100% revenue year over year, up to $8 million in the last quarter, and positive net income. Don't see that too often. Positive net income and $8 million a quarter. So on track to do about $32 million this next year. And their market cap $62 million. Balance sheet, $20 million in assets, and liabilities are much lower at around $5 million in liabilities. They have 4 times as much cash in assets and liabilities. So this isn't a hype stock. There isn't any hype around this company. They had record revenues and new contracts come out, but there's no hype around this stock. They're just aerospace, defense, and they have pretty good revenues. And I like their site. I like their releases. They just signed or had record sales of an $8.8 million uh, uh, revenues. And then shortly before that, just before that, which I do not think was included in their earnings report, a $15.5 million contract with a semiconductor manufacturer. Now, this is really interesting because, when you're looking at tech and you're seeing semiconductors, that's one of the hottest markets, and this company's still 64 million. We see them start to slowly uptrend, very consistent uptrend. With this recent pullback, they got my attention, Johnny. I think we're again going to be watching, maybe allocate some of the capital that we've been setting aside for a while into this company. And I think what I'm going to look at is, again, seeing that very consistent uptrend. We'd want to set a stop very close, probably around this 330, 335, so very close, and anticipating that it's going to continue this overall uptrend. And look at something like this, 25% to a 45 or 50% potential increase, that they kind of continue this overall uptrend. Now, if they sell off, they break pattern, that's fine. We manage risk, that's totally fine. And we'll watch them at market open over the next few days. Thanks, Johnny, again. Appreciate it. Yeah, financials looked good. I know they're not data center play, but helpful. What else do we got going on? JZEV. Okay, real quick. This ticker symbol is one that someone recommended. IMSR, 1.62 billion, and negative net income, more liabilities than assets, so I won't dive in deeper to it. What's the next one? Sorry, yeah, AD8D there. It's a nuclear play, rival to Oklo. Yeah, they got more liabilities than assets, so I just wouldn't touch them. I love the fact that you're looking at energy, especially in nuclear, and that's definitely a focus. See Sam Altman investing in nuclear, and a lot of big tech looking at better data or better energy sources. So it's a good thing to look at, but again, just more liabilities than assets. Even if it is nuclear and could be explosive technology, no pun intended, I wouldn't touch it if the liabilities are greater than the assets. All right, dollar cost averaging, picking up 100 shares, Wizard says. Awesome, Wizard. Glad it's going well. JZEV. Oh, what was the other one? The other ticker symbol that I just saw. You got AMD. LUNR, Steven says. No, Elvis says. LUNR, let's take a look. That's going to be in space tech. Was there any other data center plays? There was. Someone commented Wolf stock. It was EC. I'm going to start with the Wolf stock before we get into any other industries. Okay, so Wolf stock, last time we covered it, very consistent uptrend, kind of what we were just watching with all the other data center companies we just went over. And we were last anticipating a 17% gain on Wolf stock up into this $17 range. Very simple. It was back here. We were looking at the recovery starting. We said this seems like it's the overall trend. It's probably going to make this run. It made that 23% move, and then it pulled back down and is continuing. See it sell back up to that $14, $15 range. Now risk slightly higher on the chart, right? I see it near those all-time highs. Maybe looking like more of a pullback prone here. But why are they continuing this very consistent uptrend in the first place? And is there any room for them to continue up further? If I'm looking at them just from a technical perspective, they look overbought. RSI and MACD looking a little overbought. Might expect this sell down here. But if they're going to continue this trend, why would they? I believe that Wolf stock just recently partnered with Google, and they are working on, or they had a massive investment from Google to build more data centers. Revenue has been $47 million a quarter, growing, kind of hockey sticking even a little bit. It's up 33% year over year, but their net income is negative, which is not so hot. Balance sheet is up to 869 million in assets. That's actually a hefty balance sheet. What's their market cap? 6.6 billion. And their total liabilities are 695, which are up drastically though as well. I would say from a valuation standpoint, they're doing okay. They might actually have some more room to run. When we're looking at their recent investments from Google, we know they build data centers just like this one, and they have the infrastructure for AI, and Google's positioning themselves to be able to rely on more energy from data centers like this. And if you look at their expertise or their operations, they are a leader in energy and digital infrastructure, which is essentially the key factor in scaling AI. And they have had some momentum recently as we've seen them grow in revenues about, again, 80% year over year. And then you look at their news, we look at their company news of what they've come out with, actually should look at press releases. We don't look at hype articles. We don't look at outside third-party articles. We almost always and only consider the direct from the source press releases, because they're oftentimes going to be the only thing that we could take as factual. I've had even Yahoo Finance have fake articles. Terawulf, they just closed $1 billion in convertible notes offering. That's huge. 900 million convertible notes offering on the 29th. 500 million in private convertible notes. They're raising money like crazy, and they have a recent partnership with FluidStack through 168 megawatt AI compute venture. They're raising a ton of money actually. And I think they also had, was it August, or when did they get this Google partnership? I think it was August or earlier. But their financials look fairly good. And I think from a data center perspective, if you're looking at the infrastructure for AI and Bitcoin, Terawulf makes a lot of sense. They are on that technical side. I would expect them to sell down. From a fundamental play, there's really no telling. They could continue to rocket up. And if you're going to get a shorter term trade, I guess you might look for that 10% continuation of this trend to all-time highs. That's possible, and you'd want to have a nice stop loss or set something there. Long term probably doesn't matter too much. You might want to just dollar cost average if that's the case. Again, kind of looking for those pullbacks. We like to look for them down around this support level, rising support and resistance to potentially play the uptrends. That's usually how we trade the data center companies, or any companies for that matter. Oh my gosh, there's a ton of comments, guys. I don't know if I can read all these.
You can.
All right, I'm gonna read them all. Okay, should be looking for earnings, Michael says. And Michael is talking about, were we talking about, oh, which companies did you like today on earnings? We saw Palantir come out with earnings. Let's see. Palantir came out with earnings today and raised guidance. Revenue increased 63% year over year. Revenue growth raised to 53% target, and their EPS surged 110%, but their stock dipped about 2.9% after the report. The other companies, I gotta actually pull it up here. Maybe I can drop in to the team. You guys can see all the stuff we're working on. Let's see here. I think it was a thumbnail. Exciting earnings. I gotta get this out here. Dun, dun, dun. Oh, that's not the right thing to do. That's not what I was trying to do. Anyway, I gotta look at the earnings. I gotta set the earnings targets further for this week. November 1st. Here we are. Okay, targets. Hopefully you guys can see my screen okay. Palantir after hours today. Navitas as well. How did Navitas do? Let's go to the semiconductor market. Navitas dropped 11%. I'm not surprised. I am not surprised by this. How did they come in on earnings? Oh, they don't have it. Soft guidance. Dives on Q3 earnings. Yeah, I know it's NVIDIA hype, and they haven't had the deals. That's why we're watching it. That's why I haven't been bullish on them just yet. Anyway, when it comes to tomorrow, after hours, you got an earnings report from AMD, from Arista, from Supermicro Computer. That's tremendous. And then earlier you got Spotify. Spotify is going to be reporting earnings along with Ferrari and Uber. So, and Shopify, that's one to watch. So Spotify is definitely interesting one. I think I want to hear actually the AI impact on audio. Heard that's been huge. Same thing on like, that's been a really big factor on social media. If you guys see more AI content. And then kind of a gauge on the consumer spending and online shopping for Shopify. And then getting a gauge on chip sales, which I think are going to be very good for companies like AMD and Arista, data centers, Supermicro Computer. That will give us some good insight tomorrow. So we got some really good insight to look into tomorrow. We'll be watching very closely. What else we got? 15-minute lecture says, for data centers, I think the power that feeds them is the one to watch. LBRT. Got it. Okay. Yeah, we can take a look there. A LBRT stock. Liberty Energy. Wow, I love that. Financials look really great. Revenue, well, slightly declining this last year actually, but their revenue is around $1 billion a quarter. Positive net income, and balance sheet is around 3.5 billion with 1.4 billion in liabilities, and the market cap is at 2.9 billion. They look massively undervalued based on what I see. So why is that? Liabilities a little bit high, total equity 2 billion. That's already about the size of their current market cap. They're spending, I think what's probably worrisome maybe is they're making 950 million a quarter, but they're spending like 900 million. Maybe that's what's so concerning. They're burning so much. But honestly, if you're looking at energy, it looks like they're actually a really well priced company. Looks like they're building integrated completions portfolio. They are in the energy space. Interesting. Okay, I'll take a look at this one. Let me add it into our watch list here. Just going to add it into data center for energy, and then we can do some more analysis. Oops. LBRT. What the heck? LBRT. There we go. Okay. Rare earth. Okay, we're watching Lunar, says Elvis. We could definitely take a look at that one in a Space Tech video. Steven says, gonna be looking for hits the account, should drive that up. Yep, okay. Michael watching earnings, PE ratios. All right, what else do we got? JZev down on BigBear.ai 9% today. Ouch. Yep. You know, I actually bought the dip on BigBear.ai today. If we go over to AI Defense, the 2x of Big Bear. So it might be an AI and LLM. Let's see. The 2x of Big Bear, BAIG, dropped big time. And I ended up buying it when it was down. And so far, it hasn't moved much. Has not moved much. About $100, 97 bucks. But we bought after that massive dip into BAIG. And that's going to be one we're watching tomorrow morning. Be looking for this 10% to 20% recovery. Not a lot of 250 shares, a couple $1,000, but really looking for that recovery actually on BAIG, see a bounce. We didn't get in until after it really dipped down, and then continuing to hold the longer term positions, if not adding to them. I love the enthusiasm, guys. All right, Luis. Okay, so Luis says that he didn't want to hold Big Bear AI for a year. Okay. Yeah, I mean, if you're not wanting to hold the company for a year and you bought at 740 and it's at, what's the price right now? What is the exact price on BBAI? And I'll pull this up in the machine. Get an analysis here. Big Bear AI is at 629. Okay, you bought at 740. You bought right up here. Yeah, I mean, the next move I'm anticipating is up into that $7.50 to $8.50 range. Personally, I wouldn't sell. Personally, I don't know. It kind of depends on your approach. I don't trade anything short term that I wouldn't trade long term or hold long term. So, because ultimately you don't want to be in a position where you're holding something that you don't even want to be in. If you don't, let's say, have a plan when you go in short term and it, let's say, doesn't even go according to your non-existent plan or sells off and you don't have a setup for exiting out of that or anything, then you're in a position now where you're holding something that you wouldn't want to hold long term. And so I'd say like managing it now, if you really felt uncomfortable, you could dollar cost average or dollar cost out of it and just kind of like taper off the position, size down some of your risk so you don't lose a lot if it's like a big investment, and see if you get some recovery. Or you could just hold it, turn it into a long-term position, and like you have to feel good about it. Or if you don't feel good about it, sell it immediately and then roll it into something that you would deem as an asset that's just going to yield you higher return. And I think that's really the only options that I have. And then in those three options, whether you hold it or you average out of it or you sell it immediately, they each have nuances. If you're going to hold it for the long term, the best way to approach it would be to buy more of it. You actually want to buy more. That's like the best way to start averaging even more into it. If you didn't want to hold it long term and you kind of believe in it long term, but you're not really comfortable and you want to average out of it, then there's some nuances. Like you might want to watch the support level it's at right now. And like right now it's at a support where there would, out of all probabilities and their earnings coming up this next week, there could be a potential and a government reopening, which would impact positively the defense market. Some probabilities working towards the favor of the defense market that it would bounce up. And so just like a little more patience could be worth it. But if you're in it and you're like, I just really don't want to hold this, I'm very uncomfortable, I should have sold it earlier, I wasn't disciplined, I'm down and this just sucks and I hate to see it down so much. First of all, your money is not you, so it's not linked to your identity. You can separate that, first of all, and you don't need to feel bad. It's basically learning how to multiply it. This is the cost of learning. You'll make a lot of mistakes when you're learning, and you want to not make mistakes, but the best thing you can do is rip the band-aid off and then find a better investment. 9 times out of 10 investors aren't patient enough, though. So like, you've heard the quote from Warren Buffett, the money goes from the impatient to the patient. And so a lot of times, like, the biggest trades that I've lost are the ones that I missed out on because I sold too early or something, even though I knew it was a really great company. I knew it was going to go up. I had this very nice conviction, but something didn't, I wasn't patient enough. I wanted it too quick and I sold out, and then it went up. And that's like, obviously you don't actually lose money at that point. You just didn't get the gains, but like, maybe you lost money if it's not favorable in that sellout. But yeah, like, so more times than not, it's going to be a more patient thing. You say, well, I want to find other opportunities and I want to make more or something like that. It's like, yeah, maybe you need to like feel that way about Big Bear. How could you, in the current holding position you have with Big Bear, how could you not like want to like go chase a bunch of opportunities, but like chase opportunities in Big Bear right now? So there's something you could do. Can you add option strategy? Can you, can you average into it more? Can you, whatever you can do to like increase the, like, it's like in business, like if you're going to focus on a bunch of things, like the best thing you could do is actually like focus on a bunch of things inside of your business, not in focusing on a bunch of different businesses, or you'll just like lose. It's like trying to focus on a ton of different stocks is going to you're going to lose then to the guy that has, like Warren Buffett says, if he could give every investor a punch card and you only have 20 punches, then every punch that you make, like, that's it. And you have to hold that stock forever. Think of that as a punch. And it's like, once you punch that hole, you're in it. Now you drop into a rabbit hole. You got to know everything about the company. You got to know what you're in. You got to know where the opportunities are, where can it potentially grow. And don't jump out and jump into a different stock before fully understanding it. And it's okay if you're uncomfortable in a stock and you don't understand it. But it's not okay if you stay uncomfortable in a stock and you don't understand it. Like, the next best thing you can do is start to understand why you got into the first place. Hey, does it make sense? Are there real partnerships? Is there real world usage? Are we seeing real world usage with Big Bear? Like, yes, we are. You could see that. Are you seeing the financials? Oh, financials don't look good. They got their next earnings coming up. But did they get more investments from investors? They did. Did they have some revenue? Yeah, they had 40 million or whatever. Okay, so you got to weigh things, weigh all the individual things in that investment and understand the financials, understand the go-to-market, understand all their partners and how those enter different markets and things like that. And that will give you the best opportunity to succeed rather than focusing on a bunch of stocks. Because there are going to, like, you do not need to know every stock. You really do not need to know every stock. And I hear it so many times from like people that are like, here's all the stocks. Will, can you look at this stock and this stock and this stock? You don't need to know all the stocks. You only need to know the stocks you only need to understand the stocks. Like, what is that Bruce Lee quote where it's like, I will beat the man that practices 1,000 moves because I practiced one move 1,000 times. It's like, just fully understand the stocks that you're getting into.
Yeah, that is such good advice. That was a great way to catch my attention. When you started saying,
Tammy's here in the live session.
When you started saying, like, you said something at the beginning that caught my attention. when you're investing, focus on like one thing.
Mm.
Now I forgot because you were talking about it, but I was like, actually catches my attention.
Oh yeah, so like if you're focusing on, like if you want to focus on a ton of different things.
Yeah, don't identify with the money. You started there.
Yes.
That's a great way to catch my attention.
That's a good way to start. If you're having trouble evaluating your investment, the first place to start is to detach the money from your identity. Because like if you're going to be in an investment and it's gone down and you don't like it, or it's gone up and you love it, before deciding to stay in that stock forever or deciding to buy more of it or sell it, if it wasn't something you were invested in and was down on, how would you treat it? And it's a psychology that always the best investors use, is they're able to separate themselves from their money. You are not your money. So when your money goes up, it doesn't increase your worth. Like your worth is in your brain and in your mind and in your body and what you have. So first you got to separate that. And then second, when you are evaluating the stock, it's the same principles as when you're entering a stock, when you're exiting a stock, except vice versa. So if I'm going to buy a stock, let's say I'm going to buy a stock right now, you have to ask yourself, if I was in this, would I sell this? And if the answer is no, then it's probably a good buy. So does that make sense? And the vice versa, if a stock is up and you're wondering whether you should sell it or not, you can ask yourself, if I was looking to buy this stock, would I buy this right now? And if the answer is yes, then you probably shouldn't sell it. Two reasons why. Number one, other people will take the order and it's going to probably continue in the direction that it's going or what have you. And then number two is that if you were to sell it when you know that somebody else, somebody that you would buy it right now if you were looking at it, and you sell it anyway, then as soon as you sell it, you're going to have remorse around selling it, and you're going to want to buy it back, and you're going to feel like, oh, should I have sold or should I have bought? And that's the same thing with buying. It's like you buy something, like, oh, should I be in this? Because there's a conflict there.
You should tell them that it's always so good to go through the basics. That's what Jim Brown says. Principles, the basics. And that's part of like what you're saying. Like, would you buy this stock? Should I sell it?
Yeah, Tammy says go through the basics. We talk about that all the time. Go back to the basics when you're investing. Like, if there was one basic principle for investing, it's going to be value. And how do you determine value? Do you determine it by what's being said about it, or what somebody's talking about, or what somebody's telling you to buy, or what somebody's saying? Or do you determine it by the value? Do you determine the value by looking at the facts of the truth of what you see? It's going to be the truth. So if you're trying to determine if something's a good investment, do you just outright buy it, or do you go and look at the financials, you look at the news, you look at the earnings reports, you look at the product developments, how it's doing in the market, if there's real revenue, and if there's real world usage? And if you don't go through that step, then you're not investing based on value, you're investing based on what somebody's telling you to buy. So then it's not going to work out, and you're probably going to get into it and you're not going to like your investment. And then you're going to feel conflicted, and then emotions are going to get involved and you might not make the best decision. So that's really just it. And I think like I used to struggle with that all the time. I think every single investor that I've talked to, that if there's just a few things they would tweak, I would be like, did you check the financials? And that would almost always save them. Or it's like, the chart usually is not the thing that makes or breaks it. It's usually the financials, or it's the real world usage. Um, because you might have financials, a lot of investors coming in, buying, oh my gosh, the market cap's growing. You see like it's growing, but the real world usage isn't there. So it's just a fad. It's just a little trend, a little hype cycle or something. And so those two things are probably the biggest issues. And then like obviously there's like a lot of things like earnings per share or like EPS, but those things almost always are way longer term view than if you're making a short term investment. Yeah, so awesome guys, appreciate you all. Yeah, BBAI, we did a full video on it earlier today. We did APLD, we covered a ton of data center stocks in this video. I appreciate you all. Thanks so much for tuning in. If you guys want to join us in our daily live trading session, we'll be there tomorrow morning at Market Open. We're there every day, Monday through Friday. You get a free t-shirt when you join. And I also put together a book for you if you want it. We got the earnings targets coming out there. So you can grab that in the second link in the description below. We'd love to see you there. And we talk to almost every single customer. You can always send me a message or one of the 28 millionaires in StockMate. If you want to use AI for your investing, like we're doing, this does all of those different points that I talked about, the financials, the news, the earnings, all those things, the technicals. It does all of that for you and gets projections for you using the best AI models in the world. And so if it looks complicated, it's not. It actually does all that for you. And all you have to do is search your favorite stock, get the analysis. It will give you some projections based on which AI model you're using. And if you want to get access to that, it's the first link in the description down below. And then finally, for Eunice Rodriguez saying, LOL, you always ignore my questions. So funny. Let's take a look at let's find what Unique said. I said that name wrong. Please see NUAI. Okay, let me tell you why I missed it. First of all, I just didn't see it. Second of all, if you say why you're watching it, 10 times higher chance that I'll cover it. If you just say the ticker symbol, it's like way less chance that I'll cover it because I don't know why you're looking at it. I want to actually help you. I want to actually be able to like give you the perspective that would help you in your current situation. So if you tell me like, what are you watching? What do you like about it? What do you not like about it? Why are you following it? What gets your attention? That will not only make it to where I get you more value, it also provide people in the chat more value around your ticker symbol that you share. So if you share your ticker symbol that way, 100% will make it good. I know a lot of you guys already do that, but honestly, it's just so much better if you do that. So anyway, appreciate you all. Thanks so much for tuning in. Again, first link for the AI, second link for our daily live trading session tomorrow morning. If you want to join StockMates, you get an email. It's not here on YouTube. It's like a separate thing. You get a link in the morning, sends it over to you at Market Open. If I earned your thumbs up, smash the like button. Do consider subscribing. See you guys in the next video. Take care.